Hello, this is the TradeSite U.S. Stocks and Futures Market Preview and domestic economic data roadmap for the week beginning Sunday, the 1st of November. Statements are printed, ending Friday, the 6th. Hope you had a good trading week. Obviously, we have the election on Tuesday. It is what it is. Here's a look at the ES front month futures contract. This is the daily chart of the broad market in futures form. So, whatever. Nothing. Still where we were about 4 months ago. We've been up and down and back. Top is around Labor Day. Is what it is. Markets haven't done much. Been pretty flat. There's been a sell-off the last week or two, but we're still holding near highs and fairly flat, and I think that's fine. Obviously, from a broad market perspective, Biden's probably better for the markets long term, and we know that. You got to get the budget in balance. We got to stop, tax cutting to the point that we're running deficits. And I think short term, obviously we need to print more money and do whatever to fix COVID. But after that, we need to get serious, or else we're going to be in some big trouble. So I think long term, I think everybody knows Biden's better for the markets. Short term, whatever. It is what it is. It's going to be maybe a mess, and no problem. And I'm not super interested in opinions around that. It is what it is. I'm just here to tell you that Biden is better for the market long term. Here's a look at the ES front month futures contract. This is the daily chart of the broad market in futures form. So yeah, a lot of days down, and that's fine. And again, you can have a slow week, and Monday and Tuesday in particular, because people won't be doing anything ahead of Biden, the election. But having said that, at some point the market's going to have to start to think about what it means for these COVID numbers to be rising, and we don't have a stimulus package, and that's a negative for the market. So whether Monday and Tuesday are slow or whatever, we'll have to look at everything after that. So let's look at the major daily charts. Crude oil down $1.69 to $34.10. That's not great. Gold down $3.30. Okay. S&P cash lost $40.15 points on Friday. The Nasdaq was down almost 300 off the lows, closing off the lows. The SOX down 37. Okay, biotech's down 89. That's fine. That's again near the last 6 month lows. The Russell 2000 down 23. Not much there from that perspective. The VIX closes up 43 cents at 38.02. Obviously, the VIX has been on the rise. I will tell you that we're going to be near we're going to get a 13 cell signal on the VIX if we have one more update, and there's no recycle in sight, so that's how that's going to play out. The trend closes at 0.87, puts the 10-day moving average at 1. That doesn't do anything for us. Nasdaq, sorry about that. Nasdaq volume was only 3.6 billion shares, which is better than a lot of the days lately, but lower than most of the last few months. Advanced decline ratio on the Nasdaq was negative 1451, so more stocks down than up. On the New York, negative 640. 636, so more stocks down than up. The 10-day moving average on the advanced decline ratios is negative on the New York, and it's also negative on the Nasdaq. Google gained $59.23 post earnings. It was higher on the first gap up. Apple down $6.46. Netflix down 28.47 and approaching the lows of the last 6 months. Amazon down 174.86. Look at that 13 cell signal. That was so perfect. It's the only cell signal for a while on the dot. Tesla down 22.79 is what it is from that perspective. Facebook down 17.72. Getting near a 13 buy signal. Kind of weird. Goldman Sachs loses 90 cents and at 6 month lows. TLT, the 20-year bond ETF, down $1.57, and the Dow was down 157. So nothing super exciting in all these things. All right, we look at the 10-minute candles for the week, and what we get on the ES is this. So we had a small gap down on Monday, played lower, and then whatever. Tuesday was super flat and untradeable. Wednesday, we had a couple winners. We had a good week. We had a really good week, by the way. Wednesday, gap down, and then a little bit lower. Thursday, kind of a flat opening, tried to go back. We closed a little bit higher, and then Friday, a gap down and went lower. So it's a negative for the week on the ES, and on the NASDAQ side, not much different, although we held up earlier in the week, and that's that from that perspective. All right, in terms of intraday, no, we did the intraday. We're going to switch this back to 5-minute candles because that's how this goes. And in terms of economic data coming out in the week ahead, here's what we have. So we had the time change over the weekend. Make sure you're aware of that. On Monday, these are Eastern time. Final manufacturing PMI at 9:45. ISM manufacturing and construction spending at 10. Loan officer survey at some point in the day. Tuesday, factory orders at 10. IBD tip economic optimism number, and of course the election. We used to say that the election was on Tuesday. This could either drag out or it could be decided the same day. We don't really know, but it is what it is from this perspective. Wednesday, the ADP non-farm employment change at 8:15 a.m. Eastern time. 8:30, got the trade balance. That's one of our big three each month. That's a big number. Final services PMI at 9:45. ISM services PMI at 10. Crude oil inventories at 10:30. We start the two-day Fed meeting. So usually the Fed meeting is Tuesday, Wednesday, but because of the election, they're going to start it on Wednesday. And then it's Thursday. So on Thursday, we've got the Challenger job cuts at 7:30 a.m. Unemployment claims at 8:30. Preliminary non-farm productivity and preliminary unit labor costs. 10:30, natty gas. We got the Fed statement at 2, so that's the two-day meeting culminating in the Fed announcement at 2 p.m. on Thursday, plus the press conference at 2:30. And then on top of it, because that's not enough, let's go with the non-farm employment change and unemployment rate, 8:30 a.m. on Friday. So a lot of big numbers. And then wholesale inventories at 10, consumer credit at 3 on Friday. We've got a couple weeks of straightforward trading. Post-election, we'll see how the election goes. Obviously, the worst-case scenario for the markets is an election that gets disputed and we sit in the courts for weeks. If you remember 2000, when that happened, the markets lost about 8 to 9% between the election day and the final announcement by the Supreme Court. So we don't really want it to go that way. That would be the worst for the markets. You'd rather get an announcement early, and it is what it is. I suspect we will. Charts as usual brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great trading week.